Alright, let's take a look at market action today. So I was explaining this yesterday that I thought this was going to be a change of behavior, and it definitely is. So when it came down on, I think it's 14,000 contracts. Sometimes I get confused and say it's 1400, but the higher time frame it's 14,000. So 14,000 contracts, and that's enough to break trend. So trend is broken. All right, so it's taken out multiple lows, one, two, three, and it's moving sideways. Now, typically after a move like this, you want to see if there's going to be a bounce to test and break, or whether it's just going to break. We don't know yet. As the market presents the opportunities, jump on board. But from what I'm seeing, either way, the selling opportunities should be abundant. Um, Buyers have to really be cautious, because if you're gonna buy, be aware of this level right over here, um, and specifically this bar. I know that I kind of made it very light gray because I want to focus on the waves, but there's a bar here that is a critical bar, and that's where the breakdown occurred, and that's the the chances of testing it are quite high. Right? Um, and if it doesn't, like, if it gets into that, if it does start going higher, that's the area you want to take a look at, um, because the ease of movement is high and there's heavy selling in that area. In any case, whatever happens, jump on board. Here on the wave chart of the YM, what you see is basically markets going down, down, down. The activity increased here, and it did something here, but as you can see, there's no strength in buying, right? You have 7,000, 5,000, 3, 3, 4, 2, 4, 2, 3, 1, 3. There's no strength. Whereas on the downside, 6, 6, 5, 5, 8, and then it makes this, contracts here, breaks here, and this is interesting because this was a change in behavior, also known as sign of strength. In fact, I might start calling it that. Wyckoff actually did use the term sign of weakness. It's in his original work. I thought SMI created it, but I saw it in his original study. Anyway, so in over here you have 11,000 up. So 11,000 contracts is enough for this market is a really good amount to start a uptrend. But note that the higher time frame is down. So any uptrend, is subject to be a counter trend, and that's why playing it is not easy. And this is one of the things you're going to see with trying to enter counter trends. You have a sign of strength, and you have a spring. This is very, very common when counter trending. When counter trending, meaning buying, going long against a dominant downtrend, after a sign of strength, the possibility of there being a spring is very, very high. So this spring job here, if this market was in an uptrend, it's not easy to break the low. But the fact that the market is in a downtrend, the tests have tendencies to be on springs. Okay, and what happened is that's what you got. You got a spring. Now, want to also do is take a look at the activity. Activity is activity in this area. Alright, so you had selling and then you had buying, and the buying, they increased right there. Ding 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 ding. Okay, why did it increase? Because the stops were on. Right here. So stops were run and activity increased. Now after that, ideally you want to see a pullback that is pulling back on low activity. But this right here is okay, low, but then it does this. This is not good because it's the most active bar. And where is, there it is. The most active bar is a selling bar, not a buying bar. So you have 11,000 up, and you have increase in activity. Okay, but when it's going back down, it finds high level of activity on a selling bar that is more than the activity of any of the buying bars. That's the tip off. That's the clue, you could say, that the selling is going to be, deeper. It's going to go lower than expected because it should not go up that much. And then what you have is, it comes into this area. It kind of moves sideways here, it dries up, and then they do their spring. Right here. Okay. And of course, the activity increases because it's a stop run. Activity will, in most cases, almost always increase when there's a stop run. Key is that the bar after it has to have higher activity if they're going to reverse. So what we see is that the bar after it has higher activity. So because the activity of the bar after it is high, it means it's kind of like a forced accumulation. It goes down there, they rob everybody of their stops, and then return upward with a lot of enthusiasm, with a lot of, let's go higher. All right. So although the activity increased on the stop run because there were stops here, you know, it it told you that the market is going to go higher, or probably will go higher, because the activity increased on the green bars. And then here for sure, like, it's going to go higher because you have great ease of movement, you have high activity, the highest in the three bars, even after the stop run. It's going to go higher. And then when it pulled back, the activity is very low, which is exactly what you want to see to confirm low activity on the pullback. Activity pulls back, low. Alright, so that's why bang, 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 it goes up. And then you have this type of movement here, because you have to understand that the dominant trend is down, and this is going to that same area of high activity where there were strong sellers, and that's where the sellers came and said, you guys are not marking up, and they sold. Otherwise, this bar here, this bar here, the is a buying bar, and it would have shot up. It would have marked up, because you had everything in the bull's favor after the spring, the high activity. They did the stop run, the pullback on low activity, and you have this mega thrust right there. That thrust right there coming from a lack of supply right there. 1,000 contracts, it dried up. So they're ready to fly, but that area of high selling activity now continues to serve as resistance. And from that area, you had 18,000 contracts sold. So this is a seller's market right now. Now buyers are going back to test that area, and we'll see what happens. From what I see, like, it pulled back on 2, pulled back on 3, and then went up to 5,000 on this up wave. 5,000 is decent, pulling back on 3, and we'll see how this how this thing plays out. But it's harder to trade after hours because activity is all screwed up, volume is all screwed up. So, and you have no market internals either. So you have price and volume is measured differently because that there are less participants, right? Anyway, so from a market internals point of view, like, it actually showed that the breadth of the market was not really that good. Probably the best part was right here, because it's going down, up on 11, down on 38. Should not be doing that. This bull campaigns 61, 23. Let me see. Corrective. Right here, there seems to be bullish strength coming from this area of that pullback. Then going down at 38, then down on 4. So after this, it goes up on 32. So this is the only wave that really makes a lot of sense. Is this? Okay, 4 down, 32 up. That gives you pretty good insight. But even in this situation, like, you have to understand it's end of day. So end of day, obviously they're covering shorts, and it's very iffy. So I don't like to trade that. Now take a look at the tape reading chart. At the bottom, you see all this shit down, 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 and this is where they're trying to do something, where you have your sign of strength. Maybe I'll change your sign of strength, because Wyckoff called it. Let's call it strength. So there's evidence of strength here, and there's evidence of strength here, and there's evidence of strength here, but I don't know, like, how much they can pull, because this is obviously very clear, right? I fucking hate this. I'm not gonna do I'm changing this back. I don't know what to do, but whatever. So what you see here is basically they buy low, and it's very, very, very apparent. Like you can see, go down, 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 ding, 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 and then look at all this volume. See that? That means they're buying inventory. The bulls are buying inventory. Now, I don't know how much it's going to go up or whatever, but they're buying inventory. There's no question that off of this level there is buying. How long it lasts, I don't have a clue, but they're buying here. The tape, the tape will, the tape shows it. They bought here. Ding, 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 ding. Buying, 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 buying. And when it pulls back, it does the spring, does the retest, then they buy some more. It's not that much. And then finally here, this seems like selling. It's not selling. This is effort. There's tremendous amount of quote unquote selling, but it cannot go any lower. Why? Someone is holding the bag for the Dow. Someone has a bag right here. People are selling into it, and he's buying. Because this type of selling should have broke the market. So this is what is a volume diversion, which, you want to call it that, or you just call it high volume, but no reward. Look at the amount of volume. There's tremendous volume here. You have 6 and 2, 8, and over here these prints are at that level or smaller, but this guy, he's loaded the boat at this level. This right here is a tip off. Okay, this is telling you the price cannot go any lower. Now I don't know why it can't go any lower. Actually, I do know why. It's because someone's buying here. There's a line of accumulation here. Alright, there's a line of accumulation being built. It may have been started here where the change of behavior originally occurred. Who knows? But for sure, that is happening. And it is verified by this change of behavior on the upside. Bang. So there's accumulation, and then going up. But how much can it go? And are the sellers still present? And where are they present? Right now, there's no evidence that they're present here on the right hand side yet. They might be they probably are up there, so the market may be ready to give you something in terms of a rally from being maybe oversold or whatever, because it may be able to set up, because there is accumulation here, okay, and price can't go lower. Like you see 6-2 and then dries up and then bang, reversal. So it is ready to bounce, but understand that there's supply on the higher time frame and supply in the background. All right, so the ability to really launch is questionable, because the trend on the high time frames have turned. So whatever trend we're looking at here is very likely going to be a counter trend. Okay, that's what it looks like here. And that's real Wyckoff. Alright? Peace.